Hey guys, welcome to Real Job Optional Freedom. Real estate can be complicated. Let an investor guide you. We are here to demystify the complex nature of real estate by getting you answers from professionals who are in the trenches so you can be the hero of your real freedom story. Welcome to Real Money, a weekly segment of the Real Freedom podcast where we ask the most pressing real estate questions. Here today with my co-host Kevin Gilbert, and I'm Chris Bell. Today we're going to talk about how our experiences shape us, good, bad, and indifferent. And we're going to talk about some of our experiences in the trenches of real estate investing and macro and micro world that we're dealing in as it relates to real estate. And Kevin, you've shared several interesting stories with me about how some of your experiences have shaped you as a real estate investor. Tell us about that.
Well, all right. So these are clearly conversations only old people can have, right? So, when I was a kid, my grandmother would save 3 peas and put them in the fridge. And, you kind of make fun of that until, 2008 came along and you had your own version of those experiences, right? My grandmother was a teenager during the Great Depression, and it shapes your habits, it shapes your patterns. We experienced 2008, and it did change. I have a propensity to try and pay properties off like they're really big credit cards now, and it's because of 2008, right? These things shape us, right? When I was a kid, my dad was in the offshore oil industry. He was a construction crew, so he was the guy running the show, building the platforms, right, which is big money. So in the 80s, he was making insane money, and he was in I believe it was Brazil. And he has this story where he's paying the landlord in US dollars. And at the start of the rental lease, he's renting this giant mansion for $2,000 a month, right? And a year later, as they're experiencing this hyperinflation, he is now converting, he's still getting paid in US dollars, but he's converting, $800 to the local currency to pay his rent. So you're seeing this hyperinflation. We're kind of experiencing a very minor change in the market right now, so it's not nearly as extreme as that, but it's really interesting to just think about how things like that shape how you store or value money, right? And what is a stored asset? Are you putting gold under the bed? Are you burying it in the backyard? Are you saving in dollars in the bank, or are you buying real estate as a way to both use leverage and have something other than a dollar of stored value? So we're seeing market changes right now, and I think for assets like real estate, where you're using leverage to buy stuff, it makes for an interesting time because inflation comes, things like rent go up, the things like value of the property. I'm getting a lot of signals all over the place, but let's just say they stay still for a time, right? It holds value as you see your inflation go up. And we were just looking at history, like what were we looking at, Chris? 1970s, where your dollar changed drastically in value over a 10-year period, right?
Yeah, from 1970 to 1980, just with inflation, it started pretty low in the 3% range, and it went up to something like 11%, and then it came back down to 5%, and then it went up to 13.5%, and then it right there after the early 80s, it went down really low because Federal Reserve Chairman Paul Volcker basically what they call broke the back of inflation by raising Fed funds rates, and basically made it where you hear these stories of the old time investors. My grandfather was one of them. He had loans where they were 18% interest. And a story that shapes me from my grandfather was I remember going to him before the housing bust of '08. And I said, hey, look, I bought this house for it was $200,000, and we put a bunch of money in it, and we're selling it, and I'm going to make $50,000. And he said, that's all speculation money. And I said, what? I was like, that's not speculation money. Like, I got a physical check, man, for like, I think it was 50 or 70 grand. Like it was a lot of money, man. And he was like a speculation, and he never elaborated on that. But I later learned what he meant, because he owned commercial real estate, was his vision, being an old timer, was equity is if you bought the property for $200,000 and you paid down the loan and paid off interest and principal, you paid down principal on that loan, the principal payoff is what he considered equity. So his vantage point was, you buy real estate at a set price, and if it never goes up another dollar, speculation equity, it still makes sense. And it took me a long time to figure that out. I wish, honestly, he would have just explained it to me. I might not have
You weren't
listened.
ready to, yeah, you weren't ready to listen. No
Yeah,
way.
but that was his way of basically saying, cash flowing real estate is all that matters. Like, that's it in a
We
nutshell.
we met an investor in 2006 or 2007. The market's going through the roof, probably the same time you were talking to your grandfather. And this guy was an old roadie. So this guy's in his 60s, and he like toured with famous bands as a road crew, right? But he's in his 60s and he had rental properties, and he was worth more than I was at the time. And I remember, we went to lunch, and we're leaving lunch, and we're like, man, that guy, he's selling his houses. What's he doing? If only he pulled out the equity and did this and did that. And then, 2 years later, 2008 comes, and he's now taking the money he had sold the houses with, and he's buying new ones with it. And we're like, oh man, he's a genius. And we're literally like, this guy's an idiot. This guy's an idiot. We were not ready to listen. So I remember, now I'm like, that guy was way smarter than me, but you don't realize it in the time, because you don't have the foundation or the basis or the experiences to have that perspective that they have and see the opportunities that they see, right? So we're going through a market change right now. Interest rates are going up. We're seeing some inflation. We're seeing some changes. I'm excited about what it means for people who are getting into real estate. I remember reading this book years ago about, I believe it was the crash of '87. So the market's going in the toilet, and Warren Buffett is skipping down the halls like an excited school kid. Like, he's just happy as can be. And he's like, because he sees the opportunity that abounds in front of him. And I feel like, as an old fart now, unlike 2008, I can see the opportunity ahead of us, right? But it's only there if you're prepared for it and ready to make purchases, right? It's about to be a bad time to sell, but a great time to buy. And people were making money when interest rates were 18% in the 80s. It's just, it's a different math equation, and you're probably not doing speculation equity. You are like, if these are the numbers, they have to work for the duration. So your formula is going to change a little bit, and hopefully there's a little more education, experience, and risk factored into those equations, right?
Yeah, Kevin, we're seeing it right now. We just put a letter of intent out for, a multifamily complex, and basically what you're looking at is, run all the math, you're looking at your returns, what are acceptable to you, and you're doing it based on the interest rates. So that loan was a 20-year amortization loan, 7-year balloon at 5.01% interest on that loan. But we're talking today, we're like, well, if they don't approve that deal, then literally on
It's already too late.
June 14th, the
Yep.
Federal Reserve is meeting again, and they're already, they've kind of said already that they're going to be raising the Fed funds rates 50 basis points, which is 0.5%. But that's a big deal when it comes into the lender and the mortgage market. So you start looking at that, you look at deals, the properties that are being listed at a set price, specifically on the investor side, the investors that are trying to sell, every time a rate increase goes up, they lose value on what they can actually sell for, because investors are not going to speculate and overpay. They're looking at what debt can they get on these properties.
Right. So, we were just talking about bouncing down the halls is if you're ready to buy, like let's just make up numbers, but let's say our offer is $1 million and the rate goes up by 0.5%. Well, now our offer is 925 or 900, whatever it is. The math has to go down for it to still work. And the thing about real estate is sometimes that's a slow process. If people aren't in the business, say a family has one property and it's worth $1 million and it's split between five people and one's a farmer, one's a doctor, one's a dentist. They're not paying attention and they don't realize every time that rate changes that they just lost 50,000 or $100,000 of value. So if you're looking to buy, I think in the next 6, 8 months, as everybody starts to dawn on them that my property is not selling, it's been on the market 3 months, 6 months, maybe I need to adjust to today's actual reality and get off the roller coaster of value we were seeing when rates were 3%, because that time's gone, right? So I love this stuff. It's exciting. And I think we're about to see some amazing opportunity. The great thing about, in the 80s when the interest rates were 18% is if you can figure out making math at 18% and rates go back to a normal and you refinance into a 10% mortgage, oh my, you're going to be doing incredibly well, right? So there's opportunity there, but it all depends on how far out your time horizon is, right?
Yeah, I think one of the things, just thinking about like how um, our experiences shape us, and I think back to '08, and my main business was wholesaling properties, and I was cash rich but asset poor. I didn't own a lot of rental real estate at the time. And I remember just during that time period, the conventional wisdom was, hey, if you can, cash flow $100 or whatever it was a month, go get another mortgage, go get another mortgage, go get another mortgage. And, I wish I knew some of what I know now, which would have been, hey, you had enough money to own one property free and clear. If you had just owned one free and clear, like how much better things would have been and how much further ahead of the curve you could have been than having some of them that were not free and clear, that you end up getting into trouble in because they're over leveraged, they're underwater, and you got tenants not paying and things breaking because you don't know what you don't know if you're not paying attention to the capex or
There is no risk button on your calculator, right?
yeah,
I forgot to install it.
Yeah, that peace of mind button does not exist on a calculator, and that's hard to explain to people that are spreadsheet driven and numbers driven,
Yeah.
because they say, "Oh, I can do better if I just do this," and it's like, well,
You
but
can until you can't.
right, and I've got a whole different perspective this time around, because the first time in real estate, I didn't have a family. This time around, got a family that you've got to make sure that they're good, and you can't speculate or get into risky investments where it's going to hurt not only you financially, but ultimately it could hurt the family. So
That's
you
another old people comment, because I remember being a young man and you're like, well, what's the worst that can happen? Is I lose it all and start over? Well, I have nothing now. So what's the problem? But once you do have assets, or in the case of what you're talking about, a family, you have responsibilities, it changes your perspective, right? I'm a big uh, fan of the leverage that real estate provides, but boy, once a house is paid off, I have no plans to ever borrow on it again. So this stuff is fantastic. I love it, and I'm excited for what's coming down the street. So
Absolutely. And one of the other stories, I think, it shaped a gentleman I know, his life. He grew up in Lebanon, and
mm,
we'll probably have to get him on the podcast. But he's a real estate investor. He's a business owner, super smart guy. And he said he basically lived through two revolutions there in Lebanon, and gives his dad a ton of credit, because his dad was invested in real estate. and his dad had finances in currencies other than whatever the Lebanon currency was. And he said basically twice in his life he saw the currency go to basically zero. He said, and actually real estate went into the toilet, but he said when the economy did come back, that the real estate shot right back up, and their family did pretty well. And then here recently, he's got family members that have just come over to the States from Lebanon, where Lebanon is dealing with hyperinflation. And so I asked him, that's what got the conversation going. Like, what do they do to protect themselves, protect their assets, protect everything, their money, like during these hyper high inflation times? And that's when he was saying basically family owned real estate, family had money in other currencies, so probably the US dollar, because that was the world reserve currency, and the family had business. So it's interesting when you step back and you start looking at stuff like that and how that's shaped his life and the things that he's doing. And sometimes I think we could be smartest by listening to other people and their experiences, and trying to come up to our own decisions based on the information you given. Do your own research.
You
um,
gotta be ready to listen though.
yeah, but
Are you ready to accept that wisdom?
yeah, and basically we can learn from other people, man. Like history is a long time. History doesn't necessarily repeat itself, but it certainly rhymes if you go back and look at history. So
Yeah,
there's
it may be a different roller coaster, but it's still a roller coaster. You can see the same trends and the same physics, right?
Yeah, absolutely. I mean, you can look at it, man, and it's pretty interesting stuff. And there's honestly, there's some great videos on YouTube about history, and basically how the world is kind of, these world superpowers have come into play, and how currency has come into play, which was which currency was the major currency at the time, and how that changed over time, and how you know we, for some reason we as humans think that, oh, this stuff can't happen to us because we haven't seen it, or our grandparents didn't see it. But it's like, well, like humans are humans. Like, we've got the same basic needs over thousands of years. You need food, you need shelter, you need water. Like, just that hadn't changed. So I think
Yeah.
I think some of just learning these lessons ourselves, and us being able to share them, is important. Learning from other people that have lived through those times is important. And I think, Kevin, ultimately, to your point, um, having your ears open and being willing to hear the lesson, and take it in. I think that's ultimately important. So, guys, if you like this content and you want to hear more of it, please leave us a like, comment down below. Let us know about your experiences, or maybe you've got a relative that lived through something that was pretty dramatic, whether here in the States or somewhere else, and how they hedged or how they made things better for themselves, their families. We'd love to hear about it, and we appreciate you tuning in. Take care.